Hi, morning. Over the last 2 quarters, you've consistently spoken about AI-driven deflation, where clients are expecting more output for the same spend. Is pricing pressure now becoming structural across renewals? And can AI-led productivity gains fully offset this deflation, or should investors expect slower revenue growth across the industry?
Yeah, I think there were three parts to the question. One is pricing. I don't think pricing is a big issue unless until you are doing very large mega deals. And there, especially the deals that are coming for rebid, people face pricing pressures. We are fortunate or unfortunate not to have too many of those legacy large deals, and hence uh, we are not under that much of a pricing pressure. Your second question was on AI. I think AI is one of the biggest opportunities in front of companies of our size because it's leveling the playing field. And at Zensar, we are deeply committed to leveraging the full potential of AI, not just internally, but externally with clients also. The third question on the productivity gains from AI and the pricing, whether it'll balance each other out. I think actually what is going to happen, at least my view, is that the uh, per individual pricing might actually go up, but the overall deal sizes are going to come down because of AI. So if you look at it from the lens of overall revenue compression, yes, it will be there, but that revenue compression will not be at an individual level, but at a macro project level.
And your order book, Manish, that's declined sequentially, and this is despite maintaining a healthy large deal pipeline and book-to-bill target of approximately 1. Should investors therefore infer that revenue conversion has improved, or is the timing of deal closures becoming maybe a little more volatile?
First thing that investors and everyone needs to realize is that these deal wins are coming on the back of a bumper quarter, last quarter, where we reported 430 million or so in order bookings. So we were anyway expecting a slightly muted quarter for order bookings this quarter. Also, seasonally, this quarter is usually a weak quarter because the renewals mostly happen in Q3 and Q4, depending on the cycles, the budgeting cycles and the annual reporting cycles of our clients. Third thing I would say is while the number might look low, the composition of this number is very interesting. And the composition of this number is that new deals and from existing clients and new deals from new clients, that as a percentage has gone up beyond 50%. Previously, it used to be in the 35% range, and this time it is north of 50%. So that is a very encouraging sign for us and for, of course, for our investors.
Right. And BFSI has become nearly half of your revenues and continues to outperform. Beyond the mega deal, what gives you confidence this momentum is sustainable? And are you seeing broad-based spending across clients or just a few large transformational programs?
Even beyond the large deal, BFSI has still grown. Even if we exclude the revenues from the large deal, that is a very encouraging thing for me to report. For the next 2 years, I would say, see, anyway, BFSI is one of the largest markets and spenders in the technology space, and they are one of the early adopters. So I would say, for at least, I mean, nobody has seen 3 years, but at least for the current year and maybe parts of next year, we see BFSI as the primary growth engine overall. As far as other verticals are concerned, I mean, there is pressure on consumer services. There is some pressure on healthcare, life sciences. Um, so, um, Short answer to your question, we are looking primarily at BFSI as our growth engine, significant growth engine, and the others we expect to grow in a more secular fashion and not decline.
And Manish, how much of your AI business today represents incremental spending by clients, and how much is simply replacing the traditional application development or maintenance revenue sort of opportunity?
See, it's very difficult to break it up into new versus existing. I mean, for us, the AI is so new, number one, and it is evolving so rapidly that it is very difficult to distinguish between the between the two. But we are fairly confident and bullish about the prospects that AI holds for companies like Zensar.
Right. And your $10 million plus clients jumped sharply from 15 to 19 in Q1, and now $1 million plus clients rose to 89. How sustainable is this expansion of the top client base, and what does the concentration risk look like now that BFSI is only near 50% of that revenue mark?
The concentration risk you normally associate with individual clients and not really with the verticals, so to say. I mean, there are companies who derive 100% of their revenues from a single vertical, right? So we are not focused on concentration risk from verticals, but we are focused on concentration risk from, say, top 20 clients. Um, that is the first part of the answer. And the second thing that you mentioned, that we have increased the number of $10 million deals. See, one of the strategies has been to focus on farming, and farming is where trying to grow, take a larger market share in existing clients, and we have put a very significant process and cadence for it. And I'm happy to report that we are seeing the results of these efforts, and that is reflected in the increase in number of $10 million clients significantly.
Right. Great to have you today on the show, Manish. Thank you so much for your time.